Hello everyone. Today I will be sharing a strategy that I have completely discovered on my own and have used for the longest time to achieve the highest profit rates. I would like to specifically mention that even horizontal markets can be a problem for traders, but I have been searching for a strategy for years that can achieve low losses and high profits even in horizontal markets. Some professional traders may think this is impossible when hearing this statement, but I just laugh at this prejudice. Of course, conditions in horizontal markets are very difficult and statistics show that all financial assets generally show a horizontal trend for 70% of a year. This situation causes inevitable decline in the capital of many investors. In this video, we will learn a method that will constantly move us towards profit, even in horizontal market conditions. Of course, if the market enters a clear bear or bull trend, the profit rate will also increase significantly with this strategy. Now, I will bring up the settings for the indicators that we will use on the screen. Please set them up very carefully and add them to your chart. I recommend that you pause the video while doing this. Yes, we can learn our strategy now that we have done the indicator settings. As you can see, I chose the region that followed a long-lasting sideways trend in Ethereum's 4-hour time frame. Rest assured, the vast majority of traders either went bankrupt or lost a significant portion of their capital during this course. The less experienced trader solved the development of the market and preferred to keep his capital by not entering any transactions during the horizontal course. However, I did not stop trading in these market conditions and now exited with the results displayed on the screen. As you can see, under such market conditions, I have achieved 7 successful and 3 unsuccessful trades using this strategy. The first trade on the left is not included in the successful trades because it is not within the scope of this strategy. The main rule of this strategy is that the risk-reward ratio must be 1-to-1. If the price reaches this level of profit, the stop-loss level must be pulled back to the level where you entered the trade. This rule is definite in order to reach higher profit goals in a risk-free manner. Now, I will explain the very simple rules of the strategy by zooming in on the trades on the screen. Please listen carefully, and if you like the strategy, don't forget to also like the video and subscribe. I will start by explaining the unsuccessful trade. We can't always start every task successfully in life. This should not discourage us. This is an example of a short position. Rule 1. The red candle should close below the blue Donchian Channel line. The trade is opened with the closing of the candle. The stop-loss level should be slightly above this candle and our target level should also be the same. But unfortunately, the trade was unsuccessful. Let's examine the second short position trade now. The red candle should close below the blue Donchian Channel line. The trade is opened with the closing of the candle. The stop-loss level should be slightly above this candle and our target level should also be the same. And hit the target. Bingo! And now let's look at a long position trade that is successful again. The green candle should close above the blue Donchian Channel line. The trade is opened with the closing of the candle. The stop-loss level should be slightly below this candle and our target level should also be the same. And hit the target. Yes. Now, you might say, we set up the settings for the stochastic RSI indicator at the beginning of the video. Why don't we use that indicator? This question is quite logical. You can only use this strategy in this way, but the stochastic RSI indicator can also be used separately. I will now talk about that. Maybe this way of using it will benefit you more. Now let's look at examples using the GBP-JPY pair. Trade rule for long position. Rule 1. The green candle should close above the blue Donchian Channel pivot line, and at the same time, the stochastic RSI indicator should also be above the 70 line. Please note that we are not entering the trade here and we want to strengthen the signal. Rule 2. We wait for the stochastic RSI indicator to drop to the zero value. This drop will indicate the lowest level possible for us. Of course, this may not be the absolute bottom point. It should not be forgotten that RSI, as its name implies, gives these values to us relatively. And Rule 3. Now, we can open the trade with the closing of the first green candle we see. This is a perfect quality buy signal. Our stop loss level is placed just below the candle which gave the zero value of stochastic RSI indicator. Rule 4. In this strategy, we expect the price to close with a candle below the Donchian line to close the trade in profit. And the candle you see is the place to close the trade. As a result of the trade, a 6.3 times profit was achieved compared to the risk. Let's examine an example of a short position with this combination of our strategy, and let's end the video with this example. Trade rule for short position. Rule 1. The red candle should close below the blue Donchian Channel pivot line, and at the same time, the stochastic RSI indicator should also be below the 30 line. Please note that we are not entering the trade here and we want to strengthen the signal. And here the green candle you see corresponds to the stochastic RSI indicator below at the 100 parameter, which indicates that we are relatively at the top. We enter the trade with the closing of this candle. For the trade we opened, the stop loss level can be placed just above the Donchian pivot line because it is very close to it. Our goal is where a green candle will close above the Donchian line. In this area, depending on the preference of the trader, 50% profit can be taken and the trade can continue, or the entire trade can be closed with a 4.54 times profit rate. Clearly, as a professional trader, if I reach a profit level of 2 times the stop loss level, I close half of my trade, move the stop loss level to the entry point of the trade, and pursue higher profit rates in a risk-free manner. Of course, this is my profit-loss preference. This preference varies according to the risk understanding of each person. There is only one important factor, which is that your profit target should never be lower than your stop loss level. Let's end today's video here, and I ask you to press the like button to reach a wider audience. See you.